topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio, its employees, or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning and welcome. Man, we just finished a great show with Ask the Experts nationwide program. They were also broadcasting on TikTok, so we had a lot of great questions. So if you've come over from Ask the Experts, welcome. Steve-O there at the end was talking, goes, man, how are you going to do this? You just did an hour program with us, and now you're rolling into Tax Talk for You with another hour program. I told him, I said, man, tune in just like everybody else to hear our program every Monday at 10 a.m. Eastern time here on W4CY Radio. And you can find out how we do this. We just enjoy helping people and talking about taxes. And today, of all days, and God, what a way to start your Monday, talking about what the IRS collection process. So, if you don't owe the IRS, there is no collection process. Okay. Maybe an audit or something like that could happen, but they're not coming after you for money that you owe because you don't owe anything. But when you owe money to the IRS, whether it's your very first time ever doing it, the IRS has a structured collection process. So this is structured by law. So they've got to actually do these things. Now, as we talked about in Ask the Experts, if they send out the letters and you've moved and you don't get the letters, well, that's your fault because you didn't give them an updated address, and it's considered deemed received whether you got them or not. If your spouse gets the letters and throws them away, then they are still deemed received. So you've still received them, and therefore it continues the collection process down the road. And you'll see most of these letters that the IRS sends. If you were married filing joint, they're going to send them to both spouses. So yes, it may be redundant. Yes, it may be multiple mailings. But yes, it's considered their process of actually doing collections against you and your spouse when you're married filing joint. Now, if you were married filing separate, only the spouse that is owing the money is going to receive that letter. If you were single, of course it's just you, or had a household, it is just you. So, you can look at how the IRS is doing this collection process as against everybody who owes money on that tax return. So when they're doing this collection process, again, if you're married filing joint, it's going after both you and your spouse that were both signers on the return. Now remember, every return has two signature spots, one for the taxpayer and one for the taxpayer spouse. So depending on how you're listed on there, you still both have to sign and take responsibility for that return. So we can also talk maybe, later next week about innocent spouse. If something happens that you owe money and you didn't really have the opportunity on it, you might potentially, fall for innocent spouse. But again, until you receive that, you are both jointly liable for that tax debt on that joint filed return. So if you don't pay your tax when you file your tax return, you're going to receive a bill for the amount you owe. And that bill actually starts the collection process. And then the process is going to continue until your account is satisfied or the IRS may no longer legally collect the tax. So the first thing the IRS is going to do is send you a letter, CP-14, which is their initial demand. It's the first notice that you are going to receive when you owe the taxes, and they're demanding your payment for the balance plus penalties and interest. Now, that first notice is going to explain the balance due. It's going to include the amount of tax. It's going to show how much in penalties, how much interest has accrued on your unpaid balance from the date the tax was due, which is April 15th. Then the unpaid balance is continued to be subject to interest that compounds daily and a monthly late payment penalty up to the maximum allowed by law. So at this point, it's in your best interest to pay your full liability as soon as possible. Hey, you got the money, pay it in. Prevent more interest and more penalties from accruing. And, it'll help you minimize those charges. Now, if you don't have the money, you're going to be like many, 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 many taxpayers that we know, and you are going to probably ignore it. So that does not solve the problem. Sticking your head in the sand and ignoring it, throwing that envelope away with the IRS notice doesn't help you one iota across the board. To reduce penalties and interest on this, you might consider methods of fully financing a payment, maybe through a loan, mortgage, HELOC, even possibly credit cards, depending on your interest rates over there as well. All possibilities of things that are happening. But if you don't have any of that, then maybe it's a payment plan with the IRS. What you always want to do before you go and finance is look at the interest rate with the IRS, look at what the penalties are going to be, and make a determination what's going to be your best route to getting this paid. Now, you can start addressing this and put it in a payment plan. You can start addressing this immediately as soon as this has been assessed against you, so that you can stop the IRS collection activity against you. And it's not necessarily going to stop all the letters that you get from the IRS. As a matter of fact, you're going to get, even if you went into an installment agreement, day one on your debt, they'll send you a letter every year reminding you of how much money you owe, just so that you are kept up to date, how much you've paid on this debt and how little it's gone down because of the interest and penalties they've continued to accrue until they hit the max penalties allowed by law. And then the interest will continue until it's paid off. So it becomes a very, very hard item. And if you just want an installment agreement, you can either go online and do an installment agreement for full pay, or you can file Form 9465 and do an installment agreement request and mail it in with your bill. And if it's going to full pay it, they're going to accept it, and you can move on with your life and have it full paid. However, if you owe more than $50,000, then they're going to reject it and ask for a 433. So that is just the beginning of your fun. And I use the term fun loosely. So it's just the beginning, tip of the iceberg of the IRS collection activity. It continues to mount and build from there. So you get that first initial letter, that first reminder within, the first 5 to 6 weeks. You're going to, get that notification. And then 5 to 6 weeks later, if you haven't done a payment, you haven't set up an installment agreement, you haven't had any response whatsoever, you're going to get CP 501 notice. Now, these in the upper right-hand corner of every letter, they're going to have that CP number, so you can actually track these things through and see what notice you're at, to know how bad we've got to take that next collection activity to stop the IRS. But you're going to get CP 501, which is your first reminder, basically reminding you, hey, you have this owed, please pay this. Here's the date you need to pay it by to avoid additional penalties and interest. And they'll calculate all the penalties and interest up to that date, so you can get that tax debt paid as soon as possible. And so, the IRS is trying to find ways to make sure that you remember that you owe them. Like, you're going to forget. But out of sight, out of mind, right? If they're not doing collection activities and sending you notifications, that's the last thing that's on your mind, is paying Uncle Sam, even though it's on your mind that Uncle Sam may take items from you. Now, we're going to take a quick break. We're going to continue talking about IRS notices and where we continue to move as we go down the road. And we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. You get IRS letters. Which letter are you on? Tell us letter number in the chat, and let's talk about your IRS letter and what you should be doing with that IRS letter today, besides throwing it in the circular file here. What we want to do is make sure that, hey, if you owe the IRS, you're finding the way to make collections work for you and getting the best deal, possible. That's what the name of the game is. If you want to call dealing with the IRS a game, it's one of those games that you could easily lose if you're not careful in what you're trying to do when the IRS is coming at you for collections. So you receive that first notice, CP14, telling you your initial bill, here's what you owe, penalties and interest, and pay it. Then you got the CP 501, which is your first reminder. Hey, wake up. Joe, you still owe us money. It's been, 5 to 6 weeks since we sent you the first one, and we haven't heard from you, and you're not paying us. Then you've ignored that one, and you get CP 503. This is your second notice, and that's sent 4 to 6 weeks after the CP 501. So you got your first notice somewhere around 4 or 5 weeks after you filed and it was accepted. Then 5 to 6 weeks later, you got your second notice, and then another 4 to 6 weeks, you get your third notice. Now, this notice is being a little more demanding, telling you more and more that you need to start addressing this problem immediately. You know, they're not taking any other action right at this point other than notifying you they're about to. And, you know, that next action is going to be the notice CP 504, and it becomes that final notice of intent to levy. This is serious. This is telling you that the IRS intends to seize your state tax refunds and other assets such as bank accounts, wages. If you're a contractor, they can go after those you're working for that issue you 1099s. So they can go after all those people right there and basically start those collection activities. This is serious, folks. This is not a stick your head in the sand and hope and pray that they don't levy, because maybe you're hoping and praying that they don't know where you bank. You know, the IRS can find that out. Matter of fact, you know, we were dealing with a client who IRS was working on offering compromise with us, and they came back to us and told us that, hey, he had other accounts at another bank that potentially could be still open. They don't know. But we had to get documents proving that those accounts were closed. So they were able to find accounts out there that had been closed for a couple of years. So don't think that they can't find the accounts where you have money. And don't think the IRS, when they do finally levy your bank accounts, don't do it around when you get paid. For some reason, they are able to figure that out as well when you have the most money to lose in your account, and it gets your attention. Then the IRS is going to send you letter 1058, LT11, final notice of intent to levy. This one is certified. This is the final step before severe action against you and your accounts. It also details your right to a collection due process hearing, CDP hearing, to where you can have a hearing over their process and potentially stop activities for levies against your bank account, wage garnishments, and everything else. Now, this letter comes out, and you generally have about 30 to 45 days before the IRS actually levies your bank account. It's almost a guarantee that the IRS will levy your bank account. So, you know, don't think going and opening a new account immediately is going to help you, because they'll probably find that one as well. And if you're hopping banks, they're going to figure that out somewhere down the road. But it is time to make sure that, you know, you got your mortgage paid or your rent paid and other things paid before they pull this money out of your account, because once they take it, you become very hard pressed to go back and get money back from the IRS. Now, as they asked on Ask the Experts, you know, can you get money back from the IRS when they've done a bank levy? Yes, no, and maybe. There are times we're able to get some, if not all, the money back from the government, because they haven't received it yet. It's still sitting at the bank. The bank has about 30 days to transmit that money to the IRS to give you time to fight with the IRS to get the money back. We would have to prove that it is necessary to cover existing living expenses, or if it was a business account that was levied, money needed to make payroll or continue to make other payments to keep the business afloat. It takes a lot of work to get those things done, but it can be done depending on your life situation. So, we've kind of got to work through this as best as possible to make sure that it works and we can get the money back based on, each scenario that's out there, and everybody's scenario is different. But it shouldn't get to that point. You got CP 504 before this LT 11. They were being serious. They were going to go after levying your bank accounts and state tax refunds and wages and stuff. And we should already be dealing with it from there if we weren't already dealing at the CP 503. So, we want to get ahead of the problem to avoid the major problem of a bank or wage levy. Because once it hits that stage, they got your attention. You're going to have to deal with it. You should have already been dealing with it from there. Again, the IRS wants to make sure that you're aware of this tax debt and what they're going to do to you. Now, I hate to put it in these terms. I can't even imagine waking up and finding out that, the IRS levied my bank account, took everything I had in my bank accounts. I can't even imagine, the kind of feeling you have when you've got to tell your wife that the IRS just took everything out of your accounts and there is nothing left in them to buy food, groceries, make the mortgage payment, rent payment, car payment, whatever, insurance payment, all these things, and everything in their world is bouncing. And when things like that start bouncing, then the fees continue to mount. Not just the fee on the bank levy, but then the fee in your account for everything that the IRS took out of there that you didn't have money now to pay. And now everybody's looking at you going, hey, I need money. You got to keep the electricity on. You got to pay the rent. You got to, pay the car payment, the insurance payment. Wow, folks, that sets you up for the worst nightmare. And just imagine what your spouse is going to do to you when you have to explain to them, all these things that just happened because you weren't manning up and dealing with the tax problem. Or you started dealing with the tax problem, but figured out you didn't have the money and you just started ignoring it. And now the revenue officer's mad and they're coming after everything that you have and own. And, you don't have a defense other than, maybe setting up a payment plan with them or something. But, they took the ability to do that away from you. When they gave you the wake-up call because you stuck your head in the sand and ignored it, or you decided, hey, they hadn't done anything yet, so why do we need to do anything today? And I'm not sure those things would sit right. So the IRS is also going to send you a notice of federal tax liens. And we're going to talk about federal tax liens right after this quick break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
welcome back. Before we get into wonderful letter 3172, the notice of federal tax lien, I'm going to answer a couple of quick questions we had out here. Doesn't the IRS give you time to set up a payment plan with each notice? Absolutely. So the IRS offers with each step, each letter, roughly a 30-day, 45-day window to resolve the tax problem. They're not going to do anything, for a period of time with each letter that is sent. So it gives you the rights to, set up that payment plan or make other arrangements or put holds in place, or, maybe you're trying to get loans. They'll give you time to do those kind of things. It's communication with the IRS to be able to do it. But they definitely, with, each letter, whether it's a CP 503, CP 504, or the LT 11, they're giving you roughly 30 days to respond or protect your rights. Whether it's an appeal or collection due process hearing or whatever, maybe you have rights out there and they give you the time to do it. So make use of that time to figure out what your solution needs to be, so that we can do that within the window that they give us. Now, when you have tax debt, the IRS can and may file a tax lien. So they send you a notice of federal tax lien form letter 3172. It's usually sent independently, informing you that a public legal claim has been placed on your property. So if you have property, this is a federal tax lien, which goes against all property that you own or acquire even after the lien arises. So the federal tax lien arises automatically when the IRS sends the first notice demanding payment of the tax debt assessed against you, and you fail to pay the full amount. The filing of this, federal tax lien may affect your ability to obtain credit. Although I also understand that it's not also appearing on major credit reports, but they can find the liens that are out there against your property. So if you go to sell your house, the title company will see the lien and pull the funds to pay and satisfy the lien if there's enough money there, or the portion of that lien that it could pay. Your mortgage company is still going to be the first that gets paid, but the second any money left over beyond your mortgage is going to go to pay your debt with the IRS. Once they have the lien, the IRS generally doesn't release the lien until the tax, penalties, interest, and recording fees are all paid in full, or until the IRS may no longer collect the tax. Now, remember, there is a statute of limitations on all tax, and that's 10 years from when it's assessed, plus any days that there is a stay in the statute of limitations from things like filing for collection due process hearings, filing for non-collectible status, or even filing for offers in compromise. So there are certain things that will stop the statutes from running. So you kind of got to look at what you're doing to determine whether it's worth stopping those statutes or not. If you're really close to some of the tax years from falling off because it's close to 10 years, there may be ways we can delay to let some of that tax debt fall off before we do anything that impacts those statute of limitations as well. So if you've paid off your tax in full, then the IRS will generally release the lien within 30 days after you've had complete and full payment. In certain circumstances, they don't reduce it even when it's paid in full right away, and you have to appeal to the IRS to get those liens removed. But it is one of those things that you can do to get removed. Now, there are certain circumstances that we can get the IRS to withdraw the notice of federal tax lien even when you still owe the tax debt. And there's certain factors out there. The first one is that federal tax lien was not filed according to IRS procedures. If they operated outside of IRS procedures to get this filing of this tax lien, it can be removed. Interesting part is then they'll turn around, follow procedures, and put the lien back on. But it may buy you a little bit of time in between, maybe a chance to refinance a piece of property or something, and then pay off the tax debt and then never see the lien again. So there's always that possibility. The second one, you entered into an installment agreement to satisfy the liability. That is a possibility as well, unless the installment agreement provided for the notice of tax lien. So, there are ways to get it removed when you're in a direct debit installment agreement. But then other times it's not going to go away. Third one is if the IRS withdraws the notice of federal tax lien, it gives you the ability to pay your taxes more quickly. That can be an option out there. I've not seen that one happen unless you're maybe doing some financing or something that allows them to be able to, you to be able to pay off the debt, quicker as they'll withdraw it. And the last one is with your consent or that of the National Taxpayer Advocate, withdrawing the notice of federal tax liens in your best interest and in the best interest of the government. So really, they don't really care about your best interest. They're really concerned is the best interest of the federal government. If they were concerned about your best interest, maybe the tax system would be different, and you wouldn't be owing tax money. Maybe that's your best interest. Hey, who knows? So you got to be aware the IRS does do collection activity. The IRS, if they followed all their procedures, has the ability to levy or seize assets such as your wages, your bank accounts, Social Security, retirement income. That's right. They can also seize your property, your car, your boat, real estate. And then they turn around and sell that property to try to help satisfy the tax debt. They can also take any future federal tax refunds, state income tax refunds that you may be due. They can seize that and then apply it to your federal tax liability. So they have the ability through their collection process to satisfy debt without your help. Now, somebody asked me, do they really, really take property? You can go to the website for the U.S. Department of Revenue and see all the things they have listed for sale that they have confiscated from taxpayers. Homes, businesses, I've seen liquor licenses, inventory, equipment are all there listed, as property that the IRS has seized from a taxpayer to help satisfy their tax debt. Don't be one of those. Call Taxation Solutions. Let us get a handle on your IRS problem before the government decides they're going to levy your bank account, before they're going to garnish your wages. And you call us for a free consultation at 888-930-1016. Again, 888-930-1016. Let us get in front of the tax problem before they levy or seize any of your assets. Crazy, crazy, crazy. Hey, there's another notice that you will get from the IRS at a certain time called a CP40. We're going to explain what that is right after this quick break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
IRS notices, IRS notices, IRS seizures, IRS notices. Letter. That's what you continue to get from the IRS. Now, IRS also will send you potentially a CP40 notice. What is that? Well, if your account is assigned to a private collection agency, you're going to get this notice first, the CP40 notice. That CP40 notice is your notice that says you have been assigned to one of three collection agencies. These are private collection agencies: CBE Group, Coast Professional, Conserve are the three different groups. The IRS is required by law to use these private agencies to collect certain outstanding inactive tax debts. So this became effective back in September of 2021. So the IRS can assign one of these three collection agencies out there. So, it is crazy what they're going to do, but this is how it works. The IRS sends you that first notice of CP40 to let you know that your overdue tax account was assigned to this private collection agency. Then the private collection agency sends you their initial contact letter that has information on how to resolve your overdue taxes. Both letters contain a taxpayer authentication number that is used to confirm your identity. It's also for you to verify that the caller is legitimate. Keep that number in a safe place. You're going to want to have this information to be there. And then they do certain things to collect your debt. So you may get a call from the private collection agency. They're going to tell you they're calling about your IRS tax debt. You should then validate that the caller is actually representing one of the collection agencies that we talked about. The collection agency is going to ask you a series of questions to make sure they're talking to the correct person. And you're going to be asked to exchange portions of the taxpayer identification number with the private collection agency to validate each other's identity. And then the collection agency will be courteous, professional, and respect your taxpayer rights while following the law. They're supposed to still work within the laws that are set forth of the IRS. Private collection agencies going to work with you to resolve your overdue taxes. They're not there to supposedly threaten you. If you feel the private collection agency acted improperly, you can report it. Now, we, as tax professionals, can go and ask this file be returned to the IRS so we can deal with the IRS collections and not the private collection agency. Our private collection agency isn't there to give you a lower payment plan or not there to give you an offer in compromise. We still have to work within the IRS rules. Hey, we got some questions here. First one that we got was from Pam. If the IRS sells your assets, would you still owe, or do they have to sell the items for the total value? These items are up for auction, not up total value. They will put some minimum prices on them and everything, trying to satisfy your debt. But if it does not satisfy your debt, then you still could be on the hook for the assets. Now, if it's a business and there's nothing else left, and you close the business and you don't have trust fund penalties, yes, that debt would eventually go away. Lester asked, what if you are not the only owner of property? Can joint things be taken? Your interest in those things can be taken. So if you are a 50-50 owner of property, they have now placed a levy on that property, or if maybe you're a 1/3 owner, they can put a lien against that property where they cannot do anything. And if there's any income coming in off that property, they can garnish that income. So there's a lot of things the IRS can do, and potentially they can take that property as well. So we've got to work through the procedures of the IRS and fight them to try to maintain that property. If it's income producing property, you need that income to satisfy your tax debt, and we can use it for that. There are reasons we can keep property as well. So Paul was asking, what is the procedure and how do people know the process? Well, you can go and read the Internal Revenue Manual and Internal Revenue Code and learn the process that the IRS is going to go through and do. They also offer you Taxpayer Bill of Rights. These are the rights that you have as a taxpayer. And the most important right in there is the right of representation. Having a professional on your side, enrolled agent like myself and my staff, will guide you through the process, and you don't have to deal with it and don't have to do the research to make sure that the IRS is following their procedures to do things correctly, and you get the best representation. So using that right to representation is definitely worth its weight in gold. Now, they're going to give you policies and procedures. They're going to give you publications that you can go through and read to see what their collection process is, how to do a collection due process hearing. You can learn all that stuff yourself and move on. Pam, you have a great follow-up question. Should you try to sell the assets before the IRS tries to sell them? Absolutely. If you can get property, equipment, whatever it is that the IRS is wanting, and you're working with the IRS, they will give you time to sell that property. They have a lien on it, so anything you sell it for will go to them, but it will absolutely go a long way towards paying off your tax debt if you are being proactive to sell it to take care of tax debt. And you're probably going to get a better value for that property as opposed to the IRS doing it. Now, taking property from you is not as easy as garnishing your wages or levying your bank account or putting a levy against those that are, paying you as a business person or a contractor. So, their last resort is coming after and taking property and forcing you to sell it, or the government taking the property from you. Now, if you completely ignore the IRS and you don't want to deal with any of this, you just want to go tell them to go jump in the lake and pound sand, hey, the IRS is going to enforce whatever collections they can against you, and they will go through all their procedures that they need to take the property. So don't think that the IRS doesn't have a desire to do it. It's just the IRS would rather find a better way out of this by having you, the taxpayer, sell the property, or having you, the taxpayer, put the property up for sale, or being able to get money from you enough to satisfy the tax debt over a reasonable collection period of time. So the IRS is always looking for better solutions that will meet the government's needs. But at that point in time, meeting the government's needs isn't necessarily going hand in hand to what's in best interest for the government. And if that means protecting government by pulling property back to the government, they're going to do that, unfortunately. Pam, if you got a problem, hey, give us a call at 888-930-1016. Again, 888-930-1016. Mention taxtalk4u.com, and we're going to have some special discounts. And I hope you joined us earlier on Ask the Experts, even on TikTok. We enjoyed talking about IRS solutions and solutions to your IRS tax debt. Love the questions because it helps us, help you in every shape and form, whatever it may be, to get through IRS, problems. There's a solution to every IRS problem that's out there. You may not like 100% the solution, but there is a way out. There is a way to get the IRS and the weight of the IRS off your back, and you can get back to living your life. We have the ability sometimes of modifying things in your life that help you solve the problem with the IRS. And whatever that solution leads us to is what's going to be able to help you get back to living your life. Looking over your shoulder or sticking your head in the sand isn't comfortable, isn't the ideal way of doing things. So, you need that solution. So go to taxationsolutions.net or give us a call, 888-930-1016. Again, 888-930-1016. It's a free call, free consultation. Hey, as always, man, we appreciate you being here. We're here every Monday, 10 a.m. Eastern Time on W4CY Radio. Go find us on Facebook, Tax Talk, the letter 4, the number 4, letter U. Again, Tax Talk, the number 4, letter U.com. Or, like us over on Facebook, like us on our webpage. Never miss an episode. We're here to help bail you out from problems with the IRS, business. We're here to talk about everything taxes. Whether you're a trucker, whether you're a small business, we're here to talk about it. Bring your questions. Ask them. Let us enlighten the world for you to make your tax situation, regardless of how you are and what business you're in, a better place. And as always, have a God-blessed and glorious week. Enjoy what you do. Save as much money on taxes as possible, but always be back here Monday at Tax Talk for you. And again, it's Tax Talk, the number 4, letter U.com. We'll see you next week. God bless you, and stay out of trouble with the IRS. We'll see you next week right here at Tax Talk for you, 10 a.m. Eastern Time on W4CY Radio.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.